So even though it's moving back up towards the highs again, I'm out of the pound yen. I had just those two lonely little lots that we entered together at that 140.80 area. So I really was uninterested in 141. So I'm not going to, major psych levels must be respected. You must respect the double zeros if you're watching them or if you're actually going to put a stop, an exit at them. So, but with a 140.80 entry, I'm really not interested in 141. So the next level to watch was 142. The level after that was 143. And what I essentially did when prices exhausted at 143.50, that was the story behind the pound yen's climb. 143.50 was the resistance. And when we, basically for me, I didn't want to see this thing go back down to the zero. So I put my, what amounted to a trailing stop loss, okay, a trailing stop loss at using the 20, which meant it was at the 15 pip, and I had a profit target parked at 50. So either my 50 got hit and I ditched my position, or the 20, meaning actually the 15 got hit and I ditched my position. But I really was I'm completely uninterested in taking a ride back down through 143. Now, last night, for anyone who was watching this pound yen, and if you remember, I said this wasn't a short-term trade. I was uninterested in managing this across a 5, 15, 30. This was, after all, a daily time frame entry. Okay, this is a daily time frame entry. So I'm not going to get concerned about the wiggle that we see intraday. And gosh, we had some serious wiggle. For a little while, I was thinking to myself, wow, Rag, I know this is a long-term time frame, but we basically entered that zone between what was 141.05, 140.95. Take a look back in here, and this market gave back 100 pips. Basically, we exhausted the 142.20 area, gave back 100 pips before ultimately finding support at the major psych level. So realize that what we had was a psych level sandwich, more or less, kind of a minor and major in play. So here's the resistance at the prior resistance at 142. Notice we exhausted right around 142.20. So we have 142 even in play. 142.20 is where we exhausted in front of. Went all the way down to 141, tested the heck out of it. In fact, we went down as low as 140.85. Gang, anybody here who is still wondering why, if nothing else, if all you did was understand the way in which prices move from the double zero to the 20 to the 50 to the 80, then back around. If that's all I ever taught you, if price action, psych level Momo, which is really what this is, psych level momentum, order flow momentum. This is really what I would consider order flow, the way in which these prices move, from one of these psych levels to another, and market trends. If that's all you ever learned from me, I would be absolutely overjoyed, because it is just, that could change everything. Understanding just those two key points. Market trends and understanding the psych level and the order flow momentum. So that was completely at work here. Once we broke 140.95, that 141.00 major psych, I had to be prepared for a visit to 140.80. But exhaustion before 140.80, which we stopped at 85, tells me I'm going to snap back up to the 00 major, which is exactly what we did. Then once we get to the 00 major and get through 05, I'll expect 20. If we break 20, it's 50, from 50, 80, from 80, 00, and then all over again to where we are right now, which is why that 143.50, which is right now essentially where the resistance is coming in. And this is where I caught it this morning. And I said to myself, at this point, Rob, you've ridden this thing 200 pips, basically basically over 200 pips, darn near 250, at some point you got to pick a psych level and say I'm not going to accept the movement below it. So essentially, again, that's what got me out. Now, what else might have got me out? 143.50 is a major psych, and coming back up towards the 23.6. You know, Fibonacci's work the same way as any support and resistance. The only thing that separates Fibonacci from any other kind of support and resistance is the way in which we find it. So now, on the way back up, these are resistance levels. What was one support becomes resistance. I don't care if it's a Fibonacci. I don't care if it's a pivot. The only thing that differentiates, say, Fibonacci support and resistance from, say, psych level is Fibonacci, of course, is much more subjective. Psych levels are much more objective. But the same thing applies regardless of how these levels are derived. What was one support can become resistance. And 23.6 is definitely a level at which I've got to say, okay, not only is it a major psych, it's Fibonacci resistance. It may not have been in play in a serious way before, but it's a great overlap of two different types of analysis to say, all right, the technician in me respects this, the price action person in me respects this. That's 2 out of 3 of our chart hacking avenues, if you will. And I've only got 2 lots, so if I had 4, it would have been a different conversation. I probably would have given this market more wiggle. How do we define the wiggle? So if I would have, let's say hypothetically I did have 4 instead of 2. Let's say I had a full complement of lots. Now why do I only have 2? I just took the aggro. If you remember, we had a really big discussion about taking this trade because it did enter the 20, the area between the 20 and the 34. So we had the aggro trigger. The wiggle is going to be defined by the power stats and what my typical price movement ranges are for this pair. It is a daily time frame, so I could go as wide as the daily price movement, or I could just take it hour by hour by hour. It really depends upon how far away you're walking from your computer. So if you're in front of it, you can go ahead and take the movement per hour estimations and say, okay, on average I'm going to be somewhere between 30 and say 45 pips during the UK and US, Europe, UK, US sessions. During the Asian sessions, I'm going to be somewhere between 20 and 32, maybe as low as 15 to 32 on the price movement ranges, the PMR or the PPH, the pips per hour, however you want to phrase it, same darn thing. So I could manage it hour by hour based upon this, or I could just step out if I'm going to be away from the market. I could just step out and say, okay, what's the typical price movement range for this thing every day? Now, this is a much bigger price movement range, much wider, because you're looking at an entire day. So we could be anywhere from, take a peek, 120 to 160 pips. I am completely uninterested in giving the market that much wiggle. But initially, I had to keep that in mind, right? So was 100 pips in terms of that pullback unusual? Not really. That was on the lower end of the movement. So as soon as I saw the 100 pip pullback, I said, oh, geez, Rog, did you really give it too much? And I thought, gosh, not really. That's well within what this market is capable of doing, and I really have to trust the major psych will kick in and that the yen weakness will kick in, and I'll get the resumption of the overall trend that I am following, which is most definitely up. So we fall back on all those same ideas and decisions and questions that we would use when we're setting up our trade to manage it. Now 143.50 continues to be the pesky little resistance level. What's the high here? 143.50. That 50 level continues to be where the resistance is stepping in on this pound yen. So again, I am flat. I got stopped out at the 15 pip. Totally cool with that because the ride I took was from the 140.80 pip for 2 lots. That's about all I can squeeze out of these things. At some point, I'm just going to run out of lots to peel away as this thing moves in my favor. And that is what I do. I don't pile in more, gang. The only way that I could pile in or add to my position. So a lot of you ask, Raghee, when do you add to a position? I don't believe in the term adding to a position because I think it's a misnomer. The only way that I would enter more lots in any pair is if there is a valid entry that triggered. So people talk about adding to a position. It usually ends up being this very haphazard, this very subjective, this very, oh, I think I want to add more here, oh, I'm up $1,000 type approach. You know, whatever it is, it's very arbitrary. They'll just add to it arbitrarily. To me, an add really is the function of having another valid entry. So unless I have another valid entry trigger, I'm really not going to add to it. I'm going to do what I think a trader's job is, which is manage risk. And the most effective way of managing risk is minimizing market exposure. Now that means either by lot size or, you know, I mean, I don't know other way really. Lot size. Minimize, you know, stop losses, of course. We'll minimize it at a certain point on the chart. But to control risk, really what you're doing is you're talking about how do you minimize, how do you get the most bang for your time and buck? In other words, how do you stay in the market the least amount of time and get the most amount of movement? Because time is risk. Time exposed to the market equals risk. Being in the market, I don't care how great your entry is, being in the market is risk. Okay? So how do you minimize your market exposure but maximize your time in it? I don't want to be in the market any longer than I have to. I know it sounds funny, but that's really the function of managing risk. All right, so that's the story, and a little plus more. You know me. That's the story behind the pound yen.